If you've ever wondered whether dividend investing is really worth it, or if it's just another strategy hyped up by financial influencers, then stay exactly where you are. Because in the next few minutes, I'm going to break down something that could completely transform the way you think about building long-term wealth. Welcome back to Stock Predictor, and today we're answering a question millions of investors have asked for decades: are dividend investments actually a good idea? Let's start with something simple. Imagine getting paid just for owning a stock. Not selling it, not flipping it, not timing the market, just holding it. That's basically what dividend investing is all about. Companies share a portion of their profits with you, consistently, usually every quarter. And for many people, that sounds like the dream. But is it really that simple? Or is there something deeper we need to understand? Well, here's the truth. Dividend investing is both one of the most powerful wealth-building strategies and one of the most misunderstood. And the reason is simple. People either underestimate it or overestimate it. Some think dividends are boring, slow, outdated. Others think it's the secret path to becoming a millionaire by next year. In reality, the truth is somewhere in the middle. So let's break it down. What makes dividend investing attractive in the first place? First, stability. Many dividend-paying companies are established, profitable businesses. These aren't risky startups praying for a miracle. These are companies that have weathered recessions, market crashes, inflation spikes, all of it. When a company has paid dividends for 20, 30, even 50 years in a row, that tells you something. That tells you the business knows how to survive and keep its shareholders rewarded. Second, passive income. And let's be honest, who doesn't want that? Imagine every 3 months you're getting a deposit into your brokerage account, automatically, without lifting a finger. People use dividend income to pay bills, fund vacations, reinvest for faster growth, or even build a reliable retirement. And yes, for some people, dividends are literally their full-time income. But before you get too excited, there's a huge catch, and we'll get to that in a minute. But first, let's talk about something that dividend haters often point out: the growth potential. Critics say dividend stocks don't grow as fast as tech companies or small caps. And sometimes, that's true. When a company pays out dividends, it's using money that could have been reinvested back into the business. So if you're chasing hyper-growth, dividend stocks may feel slow. But here's the twist. When you reinvest those dividends back into the stock, you're buying more shares. And those shares pay more dividends. And then those dividends buy even more shares. And the cycle repeats. That's the beauty of compounding. Compounding dividends is like planting a small tree that grows into a forest over time. Let me give you an example. If someone invested $10,000 into a solid dividend-paying stock in the 1980s and reinvested every dividend, that investment could easily be worth hundreds of thousands today. Not because the stock price skyrocketed overnight, but because dividends compounded quietly in the background. You didn't notice it month to month, but over decades, the growth becomes massive. But let's be honest, not all dividend stocks are created equal. Some companies have extremely high dividend yields, and beginners get attracted to them quickly. You see 10%, 12%, even 20% dividend yields, and your brain goes crazy. You think, wow, I can become rich fast. But here's the truth. High yields often mean high risk. If a company is paying a huge dividend, it might be because the stock price collapsed. A falling stock price makes the yield look bigger. So that, amazing, 15% yield might actually be a warning sign, not a gift. That's why smart dividend investors look deeper. They don't just ask, how much is the dividend? They ask, is the dividend safe? Because nothing hurts more than when a company cuts its dividend. You think you're getting stable income, and suddenly, boom, the company slashes the payout. The stock drops, your income drops, and that's painful. So what should you look for instead? Companies known as dividend aristocrats. These are businesses that have increased their dividends every single year for at least 25 years. Some have been paying more and more for 40 or even 50 years. Think about how impressive that is. Through recessions, market crashes, global crises, they still increased dividends. That's the kind of consistency long-term investors love. But even with all these benefits, let's address the other side of the argument, the downsides. Because yes, dividend investing isn't perfect. First, taxes. Depending on where you live, dividends can be taxed. That means not all the money goes directly into your pocket. This is important to understand, especially if you're relying on dividend income for your lifestyle. Second, slow growth. While dividends compound beautifully, they require patience. Dividend investing is not a get-rich-quick plan. It's a get-rich-slowly but safely plan. If you want a strategy that makes you rich next month, this isn't it. Dividend investing shines over decades, not days. Third, company risk. Even great companies can fall. A business that paid dividends for 30 years can run into trouble. No stock is 100% safe. That's why diversification matters. You don't put all your money into one stock because it looks safe. You spread it across sectors, utilities, healthcare, finance, consumer goods, so no single company can ruin your entire plan. Now, let's talk about something most people don't realize. Dividends can actually help stabilize your portfolio during market crashes. When the stock market falls, dividend investors still get paid. Even if the stock price drops, the dividend often stays the same. This gives investors confidence to hold steady instead of panicking. And this psychological advantage is valuable. When you know money is still coming in, you don't feel the urge to sell everything during a crisis. But here's the most important part of the entire video, the answer to the big question. Are dividend investments a good idea? The real answer depends on your goals. If you're looking for long-term stability, steady income, and wealth that builds slowly but surely, then yes, dividend investing is one of the smartest strategies you can follow. If you want fast money, excitement, and high-risk bets, then no, dividend investing might feel too slow for you. It also depends on your life stage. Younger investors might prefer a mix of growth stocks and dividends. Older investors might rely more on dividends to support their lifestyle. Some people reinvest dividends for decades, then shift to using the income when they retire. That's the beauty of dividend strategies, they grow with you. They adapt to your life and goals. One thing I always tell people is, don't chase yield. Chase quality. A company with a 3% safe dividend and strong financials is better than one with a 12% unstable dividend. Quality beats hype every time. Look for companies with strong cash flow, low payout ratios, solid debt management, and a proven history of paying dividends. These are the foundations of a good dividend portfolio. Also, understand the different types of dividend stocks. You have blue-chip companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble, companies that have paid dividends for generations. Then you have REITs, or real estate investment trusts, which pay out most of their income as dividends. These can offer higher yields but also come with different risks. Then you have dividend ETFs, funds that hold dozens or hundreds of dividend stocks. These give you instant diversification and are perfect for beginners who don't want to research individual companies. Another powerful thing about dividend investing is how it can support financial independence. Many people dream of leaving their jobs, traveling the world, or spending more time with their families. Dividend investing can help make that possible. When you build a large enough portfolio that pays consistent income, you're essentially buying your freedom. You're buying time, and in life, time is the real wealth. But here's the big secret most people don't talk about. Dividend investing requires discipline. It requires patience. It requires faith in the long-term power of compounding. Many people quit too early. They see small dividends in the beginning and think it's not working. But dividend investing is like planting seeds. At first, nothing happens. Then slowly, things begin to grow. And eventually, you look back and realize the small seeds turned into a financial forest. So if you're watching this and wondering whether you should start dividend investing, I'll tell you this: start small. Pick a few high-quality companies. Reinvest your dividends automatically. Add money consistently. And don't panic during market drops. Trust the process. Trust the compounding. Trust the history that shows dividend investing works. Let me leave you with this thought. The world is full of investment strategies: options trading, crypto, growth stocks, day trading. Some are risky, some are complicated, some are unpredictable. But dividend investing is simple. It's slow, it's steady, but that steady approach has built more millionaires quietly in the background than almost any other strategy. And if you give it time, it can do the same for you. So to answer the question, yes, dividend investing can be a very good idea. Not because it makes you rich overnight, but because it helps you build real, lasting wealth over time. And at the end of the day, that's what true financial freedom is all about. If you found this video helpful, make sure to hit that like button, subscribe to Stock Predictor, and leave a comment telling me your favorite dividend stock. Thank you for watching, and I'll see you in the next video.